Yeah, I think we've probably seen as much support for it through rate channels. Of course, a lot of this is down to the weakness of the dollar against everything yesterday, which is why we've hit these critical levels in cable. But I think the growth numbers this morning, even though they were a bit better than expected, still show a fairly stagnant economy. It's not as bad, I think, as was forecast. Certainly, the Bank of England's forecast for a prolonged recession is not materializing, and we have high household savings and a strong labor market to thank for that. But I do think you're also seeing housing numbers that are starting to show some of the cracks forming, and I think that drives a lot of the economy, or enough, sufficiently so, that along with much tighter policy from the Bank of England, you'll start to see growth slowing, say, second half of this year into early next year.
How far do you think the Bank of England is going to actually go with their rate hikes? They keep pushing the message, even yesterday in their financial stability report, that the UK economy is resilient. They're throwing out a lot of lines about their confidence in the housing market, despite, as you said, the concerns that exist around it.
It is resilient, and it's been far more resilient than I would have expected. But I do think you're getting to a point, especially with housing, especially with the cost of finance, and just generally the cost of living, having really crimping incomes on a real basis. Real retail sales volumes are flat for the last few years. There's been no real growth in that side of the economy. And I think you're going to start to see the lagged effects of policy come through. And actually, you're also starting to see inflation coming lower. We have indices that track real-time online goods price inflation. And they're falling quite dramatically for the UK now. And that speaks to tightness of policy, perhaps weakening demand. So I think they're not going to deliver what is priced. I think we're priced close to 6.25%, maybe 6.5%. So 5.5% is probably about where we get to.
Can we just go back over the cause? I mean, the war in Ukraine has been blamed for keeping inflation around longer than anticipated. Obviously, COVID was one of the issues. But is monetary policy the area that we should be tackling some of the inflation problems with? Because I wonder whether fiscal policy has been the root of all evil here, whether that's been the cause, the fact that we've got too much stimulus coming into the system. Policymakers didn't look at the implications of more people changing to fixed mortgages, that you've got millennials who are not loaded up on credit as much. So the transmission mechanism for monetary policy has changed over the years. Was fiscal policy wrong then in that context, because policymakers didn't take account of the fact that there wouldn't be an ability to tighten if inflation got out of control?
I think at the time it's really difficult to say that was wrong, because you're dealing with a pandemic which we haven't dealt with in 70 plus years. And so I think the erring on the side of aggressiveness was probably the thing to do, because you just don't know.
Yeah, but we're in hindsight now.
Oh, well, yeah, of course, everything
and
was clear.
And this impacts the future and what we decide in future in terms of fiscal policy.
The difference between this crisis clearly and why it was inflationary versus the GFC was fiscal policy, because we went straight into austerity within a year or two of that particular crisis, and we're only starting to think about that for the UK and other economies now. And that was clearly the difference in the response to those particular crises. So yes, fiscal restraint is probably the more effective way of reining in inflation at this point.